Hi, I'm Joey Blanco with RWB Realty Group, and in today's video, I'm going to walk with you through one of the tools that I use in helping clients determine what their budget could possibly be. Now, a lot of times we get first-time home buyers, and they have no idea about how much home they should be looking for because they don't quite understand what the payment's going to be based on the interest rates and everything else that goes along with buying a new home. Neither did I when I first started. Uh, but we have tools now, thank you to the internet and to apps. We have tools that make it super simple. And this is one of the tools brought to you by CTO Agent One, and it is awesome. And so let's just walk you right through it. And so this is how I would help a client. So I went with the household income of 56,456. Now you may be asking yourself, that's pretty specific, but that is for Oklahoma City. That is the average income for us residents in Oklahoma City, average household income. And so I also took a look at the average car payment. Average new car payments, that's around $700 a month. Average used car payments, that's around $500 a month. So I just split the difference and went with $600 a month, assuming that you have a car payment. Same thing with the Visa. On average, people carry about a $5,000 balance. Minimum payment's 1%, so that puts it at $50 a month. And then I assumed that you probably have some other debts that will add up to $200 a month. This could be student loans, this could be personal loans, and so have you. So with a 56K annual household income and these debts, our calculations tell us that you could be approved for a house payment of either, on a conventional loan, $844, or an FHA loan, almost $1,100. And of course, for my military folks out there, close to $1,300, $1,267. And the reason why this is, you'll see here are the ratios. And so the debt to income ratios that are allowed by the banks differ depending on whether or not you're doing a conventional FHA or VA loan. And so as you can see, the VA will let you stretch yourself pretty thin, too thin if you ask me, compared to the conventional loan where they don't allow you to have as much debt. So we're going to go with the middle and say, okay, so we can afford a 1079 house payment. How much house could I buy with that? And so we'll click the arrow here, and you could see it put some data into here, our desired house payment, what the going interest rate is, the term, and taxes and insurance. Let's say we're not going to have any HOA. We'll hit the compute button, and then boom, it spits it out. So if you're going to put the minimum down payment, which is required by an FHA loan of 3.5%, then you are going to be putting down $4,200 as your down payment. And you could afford a $121,000 home. Now, when we look at the details of this, your monthly payment is going to be $1,079. That includes principal and interest, taxes and insurance, and your mortgage insurance premium. You will have to bring to close right around $10,000. And so that includes your down payment along with your prepaids and your fixed costs. Prepaids are you have to prepay your homeowner's insurance in advance, plus a little bit of interest and property taxes. And so, what does that tell us? If you're making $56,000, and you have debt, you're going to be limited on how much home you could buy. Now, one of the things I like to do is, let's say we had no debt. Let's say we paid off that car, we paid off the Visa and all the other crap, and we're making $56,000 a year with no debt, how much house could we afford? Well, let's redo things. New estimate, put our $56,000 and zero debt. Well, the new math tells us that, okay, now we can afford a 1364 house payment. And we go back through it again, hit compute. Now we're up to a $153,000 house. And that is with 3.5% down. Of course, since you're buying a more expensive house, you'll need to bring more down payment. And I imagine you'll bring to close, yes, it's going to be about $12,000. But if you were responsible and you paid off all your debts and you put all the money, let's say you made a pretend car payment into a savings account, over time you'll have a chunk to put down. Let's say you could afford to put 5% down or 6% down. Then, your buying power goes up. Now you can buy a $156,000 home. All right, we're going to do one more calculation here just for gee whiz. So let's say your household income, let's say each of you are making $50,000. We'll just, simple math. I like simple math. $100,000 household income, and you have no debt. What does that look like? Well, now you can afford a $2,400 payment. And with an FHA loan, 3.5% down, you're looking at a $271,000 house, and you'll need to bring almost $20,000 to closing. However, if you're making $100,000 a year and you have no debt, then I assume that you will be able to save that $20,000 pretty quickly. Now, one of the things I do like to do, or something that I practiced when I was younger, is when I was thinking about making a purchase, and I'm gonna go off on a little story here, so you could fast forward through this part if you don't want to hear the story. But when I was looking to make a purchase and I wanted to buy a new home, I would figure out what that house payment was going to be. And let's say, for example, back then the house payment was going to be $1,500 a month. Well, I was only paying rent at the time of $1,000 a month. And so one exercise I would do before making this purchase, say you could do the same thing for a car, I did the same thing, is I pretended like I made $1,500 payments. Now, I wouldn't pay $1,500 payment to my rent, but I would write a check for $1,000 for my rent, and then I would write another check into another bank account that I opened, not the same bank account that, I drew money out with for my groceries and my bills and so forth, but a completely different bank. I would write a check for the difference to that bank account and do it for 6 months. And if after 6 months you are comfortable with making those $1,500 a month payments, 1,000 to your rent, 500 to your savings, well, then you know that you can move forward with the purchase. And as a bonus, you've got some money saved up. Now, if you struggle to put that $500 to write the $1,000 check for rent plus $500 check into your savings, and you struggle with that, and you're really at the end of the month, you're really running thin, well, then you know that $1,500 a month is a little bit too much to bear. And so you need to come up with a new goal, and maybe you really can only afford a $1,200 a month house payment. And then you try that, write the $200 check. And so that's an exercise that I like to do to determine whether or not I can afford a long-term payment just by a relatively short-term experiment. So, but that was just a little tangent. But the purpose of this video is just really to show you what debt can do and the difference it can make. I mean, if you're making $100,000 a year, let's say you've got a brand new car, all right, and you're paying $700 a month. And then, you make $100,000 a year, you have $10,000 in debt as far as your visa goes. So we're going to put your car payment, and then we're going to put your visa, and then other, $500, because you make $100,000 a year, you could afford all these debts, right? Well, you can, after you hit the commute button, then, your debt to income ratios, you could see how it affected you. On a conventional loan, you're down to $1,700 is all you'll be able to afford for a payment. And then on a conventional loan, you're down to only being able to buy a 200,000. I say only, but if you're making $100,000 a year, you will only be able to purchase a $200,000 house, and that's with 10% down because we're in a conventional loan. And so, again, I've got these tools. So if you're in the market to buy a home and you're unsure about what your budget should be, give me a call. I can take you through this. Unfortunately, this calculator isn't open to the public, I don't believe. But there are plenty of calculators online that are free if you're not a realtor and you want to figure it out, or even easier, so you don't have to mess with it, give us a call at RWB Realty Group. I'd be more than happy to walk you through it and kind of coaching you and just giving you some guidance on a budget that may fit your needs. And if you need help with creating a budget, I can help you with that too. As you could see with these calculators, I get pretty geeky about the numbers. I love crunching numbers, but more importantly, I love helping people. And so you give us a call. There's no obligation. I'm not going to charge you a consulting fee or anything like that. I will talk houses with you all day long. And if you want to crunch numbers, we will do that as well. So again, this video is probably long and drawn out. I see I'm passing the 13-minute mark, but I wanted to get all of that in. So as always, if you're looking to buy or sell a home, give us a call, RWB Realty Group. We'd be happy to help you. Thank you.